You are now in ancient Egypt. Roughly 5,000 years ago, the Nile River has just flooded and receded, leaving behind rich, dark, fertile soil across your farmland. You have planted your crops, you have watched them grow, you have harvested them with your own hands under a brutal sun, and just when you are ready to feed your family and store the rest for the dry season ahead, a man with a scroll and an official seal arrives at your farm. He does not ask how you are. He does not care that your children are hungry or that the harvest was difficult this year. He measures your grain, he counts your livestock, he calculates what you owe to the Pharaoh, and then he takes it right there, directly from your pile, before you have eaten a single grain of it yourself. That is tax in its oldest, most naked, most brutally honest form. Not a percentage deducted invisibly from a digital payslip. A physical man standing in your field, in your home, in your grain store, taking a portion of everything you produced with your body and your sweat on behalf of a ruler you may have never seen in your life. And here is the first thing that will completely change how you see this system. The ancient Egyptians did not just tax your grain, they taxed your cooking oil, they taxed your use of the Nile River for fishing, they taxed your craft if you were a potter or a weaver. And if you died, if you passed away leaving property behind, your family was taxed on what you left them. Death did not free you from tax in ancient Egypt, it just transferred the bill to your children. The tax collectors of ancient Egypt were called scribes, and they were some of the most powerful and most feared people in the entire civilization. Being a scribe, a literate, numerate government official with the authority to assess and collect, was one of the most desirable careers in ancient Egyptian society, not because it was noble, not because it was honorable, because it was powerful, because a scribe with a measuring rope and the seal of authority could walk onto any farm in Egypt and take what he determined the Pharaoh was owed, and there was nothing you could do about it. Now let us move to ancient Rome, and this is where it gets even more outrageous. In ancient Rome, the government did not always collect taxes directly. Instead, they created a system so corrupt, so predatory, and so brilliantly designed to extract maximum money from ordinary people that modern financial scholars still study it today with a mixture of awe and disgust. The Romans sold the right to collect taxes to private businessmen. These men were called publicani, and they essentially bought a government contract, giving them legal authority to collect taxes from a specific region. Whatever they collected above the amount promised to the Roman treasury, they kept as profit. You need to stop and really absorb what that means. Private businessmen, legally authorized by the government, incentivized to take as much as possible from ordinary people, because everything above the government's fixed amount went directly into their own pocket. These tax farmers, as historians call them, were not civil servants following rules. They were entrepreneurs maximizing revenue from human beings, and the people they collected from had almost no legal protection against them. The word extortion exists for a reason, and the Roman tax collection system is one of the clearest historical examples of legalized extortion ever created by any government. Ordinary Romans feared the tax collector the way they feared disease. The word publicani, which once simply meant a public contractor, became so associated with greed and moral corruption that it is used multiple times in the Bible as a symbol of sinfulness. Tax collectors in ancient Rome were that despised, universally, historically, by everyone. Now, here is a fact so strange and so specific that most people simply refuse to believe it when they first hear it. In 17th century England, the British government introduced a tax on windows, not income, not land, not goods, windows. The number of windows in your house determined how much tax you paid to the crown. The more windows you had, the wealthier you were assumed to be, and therefore the more you owed. and people's response to this tax is one of the most human, most creative, and most desperate things in all of financial history. They bricked up their windows. Across England, Scotland, and Ireland, ordinary people literally filled in their windows with bricks and mortar to reduce their tax bill. To this day, if you walk through certain old British towns and look at old stone buildings, you can still see the outlines of bricked up windows, the physical scars of a tax people refuse to pay. A 500-year-old act of financial resistance preserved in stone. And one final ancient story that connects directly to you, to your country, and to the money in your pocket today. In 1773, in the American colonies under British rule, a group of furious colonists dressed as Native Americans boarded 3 ships in Boston Harbor and threw an entire cargo of British tea into the water. You know this story as the Boston Tea Party, but most people know it only as a political protest about freedom. What it actually was, at its core, at its financial heart, was a tax revolt. The British government had imposed a tax on tea imported to the colonies without giving the colonists any representation in the parliament that created the tax. Their famous cry was not "Give us liberty." The original economic financial cry was "No taxation without representation." The United States of America, the wealthiest nation in modern human history, was literally born from a tax dispute. The country you live in, the dollar you earn, the financial system you operate inside every single day, it all traces back to a fight about tax. Welcome back to the present. Every month before your salary reaches your bank account, a portion of it is already gone. You did not spend it. You did not choose to give it. It was taken before you ever touched it. And most people accept this so completely, so automatically, so without question, that they have never once sat down and asked the most important financial question about tax that exists. Not how much do I pay, but do the people with more money than me pay the same percentage that I do? The answer to that question is one of the most important financial revelations you will ever receive. And the answer is no. Definitively, provably, legally, no. Here's how the modern tax system actually works in most countries, explained as simply as possible. Income tax operates on what is called a progressive bracket system. This means the more you earn, the higher the percentage of that earning that goes to tax. If you earn $30,000 a year, you might pay 10 to 12% in federal income tax. If you earn $500,000 a year, you might pay 37% on the top portion of that income. On paper, this sounds like the wealthy pay more, and in terms of raw dollars, they do. But here's the part that the system does not advertise. The kind of income that most wealthy people actually receive is not a salary at all. It is investment income, capital gains, dividends, profits from assets, and in most countries, investment income is taxed at a significantly lower rate than the income you earn from working. In the United States, long-term capital gains are taxed at a maximum of 20% for most high earners, while ordinary workers pay up to 37% on their salary income. The billionaire who earns most of their wealth through investments pays a lower tax rate than the nurse, the teacher, and the bus driver who earn everything through working. That is not a conspiracy theory. That is written directly into the tax code of most developed nations. It is not hidden. It is just never explained. And this brings us to the most important distinction in modern personal finance that most people never learn: the difference between tax avoidance and tax evasion. Tax evasion is illegal. It means hiding income, lying on your tax return, and deliberately deceiving the government about what you owe. Tax evasion gets people sent to prison. Tax avoidance, on the other hand, is completely legal. It means using the rules that already exist inside the tax code to legally reduce what you owe. retirement accounts, business deductions, investment structures, charitable giving, depreciation allowances. These are all legal tools built into the tax system that reduce taxable income. Every wealthy person and every major corporation uses them constantly. And here's the extraordinary thing, these tools are available to you too. Most people simply do not know they exist. Contributing to a retirement account like a 401k or an IRA reduces your taxable income in the year you contribute. If you contribute $500 a month to your retirement account, you're not just saving for your future, you are legally reducing the amount of your income that the government can tax right now. If you run any kind of side business or self-employed income, legitimate business expenses reduce your taxable income dollar for dollar. If you own investment assets, there are legal strategies for timing when you sell them to minimize the capital gains tax you owe. The ancient Egyptian farmer had no choice. The government scribe arrived, measured his grain, and took a portion he had no power to negotiate or reduce. He was entirely at the mercy of a system designed to extract maximum resources from the people least able to fight back. But you are not living in ancient Egypt. You are living in a system that, despite all its unfairness and all its complexity, contains legal tools specifically designed to let you pay less if you understand them. The wealthy use these tools constantly. The majority of ordinary working people pay full rate their entire careers without ever realizing the tools exist. The Roman tax farmers made their profit from your ignorance and your powerlessness. The modern tax system makes its maximum extraction from the same thing, your ignorance, not your income, your ignorance. So here's where I leave you today. 5,000 years ago, a man with a scroll stood in your field and took your grain before you could eat it. Today, a number on a payslip disappears before you can spend it. The mechanism is different, the principle is identical, but unlike that ancient Egyptian farmer standing helpless in his own field, you have something he never had. You have access to the rules, you have access to the tools, you have access to the knowledge that the people running the system use to make sure their own money stays exactly where they want it. The only question is whether you are going to keep paying full price for a system that already has a discount built into it for anyone willing to learn how to find it. Subscribe to Money Through the Ages, because next time we are going deeper into another financial word you live with every single day, and what you discover about where it came from will make everything you thought you knew about money look completely different.